So meet Kevin is making an ETF out there. I learned about this after watching Scott Schaefer, the Crypto Jedi. I wanted to dive into it because I feel that people are going to gloss over some of the important details that can and will hurt you during the bad periods. You should subscribe to Scott down below as well as me. I don't think this is going to be the last time we're going to be talking about this, especially since this is basically just started, but we'll see how this goes. To preface this, I liked Kevin as a marketer and real estate guy, not so much with the stock stuff, especially since, I think he's only been in the market for about a year or so. And after that 1 year of success, he feels that he is able to teach others on how to do this during one of the greatest bull markets of all time. Now, if you're a fan of Kevin's or maybe just a really smart hater, let me know down in the comments down below if I did get something wrong. Obviously, I will try to correct the record. But I've noticed that it's not just Kevin. I'm not trying to pick on him specifically, but there's a lot of marketers and real estate guys that are appearing in the stock space, citing that they had massive success in one of the greatest bull market runs ever, marketing themselves as these geniuses or whatever, right? And a lot of them come with this real estate mentality of if the security goes against you, they don't say double down, they say DCA, and a lot of them do this in real estate where they will hold the house until eventually when the market rebounds or whatever, right? But that's not always the case, especially not in stocks. Just look at any company out there that had to do a reverse split, in some cases more, but it never just stopped just at one. Now, I'm not saying that I'm the expert in the situation. I was in liquidity. I never dealt with ETFs or mutual funds or how they were run, but I know enough to not personally like them, especially for my situation, and I leave the evidence up to you to determine, and some thoughts I will offer to help you make a better decision whether you think this is for you or not. So off the rip, I don't like this part. I understand why they didn't put in any of the operational expenses because they don't know how active they're going to be and so forth. But I don't like how that they're not. This is still preliminary too, but I don't like not knowing what the management fee is. You have to know what that management fee is because at the end of the day, it affects your bottom line, which affects the stock price. You don't have to believe me. Believe what Vanguard says, because imagine you had $100,000. If it earned 6% a year for the next 25 years, you'd end up with $430,000. If you paid 2% a year in costs, after 25 years, you'd only have about $260,000. So for every 2% that you paid every year was almost 40% of your final account value wiped out. Doesn't seem so small, right? A lot of people might not care about a 2-3% management fee, especially if, it's like Kathy Wood's ARK portfolio where it went up 200-300%. But you will care when the fund's not doing so well because they still take that 2 or 3% even when the fund is down. Obviously, this is still preliminary, and I might be over-exaggerating, and the management fee might be absolutely nothing. But at the same time, I'm also seeing this part where it says that Toroso Investments reduced its unit management fee, at least until X date of 2023. Reading through the strategy section, he's talking about putting money into the tech sector, specifically anything that's innovative or disruptive technologies, which is very closely aligned with ARK, and we see how that's doing so far right now. This section here says that the ETFs will generally comprise of 40 and 70% of the fund's portfolio seeking to blah, blah, and so forth. But if I'm reading this correctly, this also means that Kevin has access to 30 to 60% of the entire fund's cash to go invest into wherever he sees fit. And on top of all this, what's also, I guess, somewhat scary for me personally is that he could actually invest this all into one particular stock because he does not have a diversification requirement. Now, despite what a small handful of people might think, I don't follow Meet Kevin or anybody else I talk about really as closely as they think I do. I have my own portfolio to manage as well, but I'm aware of him pulling his entire portfolio in January, which I personally didn't disagree with based on my macroeconomic research, which is very poor, by the way. I don't have his broker statements in front of me to really verify that he did pull out or didn't pull out, et cetera, et cetera. I don't really care to go digging for that, but I do, however, want to look into the other actual accredited advisors or investment advisors that are on the board there as well from Toroso Investments. I will have these linked down below so you can go through at your own leisure, but first thing you do, read the objective, and this portfolio's objective is to outperform the S&P 500 on a full market cycle while maintaining lower volatility than the market. And there is a specific reason why some of these are actually colored in and some of these are gray. It's because your eyes will gravitate to these ones first and not to these ones down here and so forth, right? And if you look initially, you think, oh, cool, it made money, whatever, right? But if you actually look at it, actually look at it, right? Here's the benchmark for the S&P 500. Since inception, so 2013, they made about the S&P made about 12.14%, whereas their portfolio, which was supposed to outperformed the S&P only made 11%. So 1% difference, big whoop, right? Or whatever, right? Until you look at this section down here, because this is not factored in with the management fees at the end of the day. If you factor in the management fees every year, it actually turns out to be 9.69%. And you can just go through all these other ones. They're not like, all of them are not designed to outpace the S&P 500, but you get the gist of it. I'll leave the choice to you whether you think that, you know, it's worth the risk to put your money with these guys. And I know they'll say something like, you know, past performance is not indicative of future success and so forth or whatever, right? But at the same time, it's a good glimpse into how they think and how they do. Yes, some people can evolve over time, but a lot of them don't have to, especially when you are running a fund, because regardless of success, like I think I've outlined this quite a lot, and you guys should really go look at your own investment portfolio, what their incentives are. Their incentive, they don't really care about making money or not, because at the end of the day, they still collect that 2% fee. One very quick last thing, and I'm not accusing Kevin of anything, but I don't disagree with Scott in the speculation that he thinks that, or he alleges that Kevin might be trying to use his internet celebrity status to promote his fund. And I'm not a lawyer, and I don't know if that's what he's planning on doing or anything like that. I'm not implying or inferring he's going to do that, but if you look at his channel, it's kind of hard not to come to that conclusion. And I think it's going to be kind of difficult if that is his plan, because there are a lot of rules when it comes to the SEC and when it comes to essentially advertising your fund. You can't promote certain things. You can't advertise, testimonials, paid testimonials. You can't advertise performance. You can't cherry pick certain performances on top of that, just to name a few that I've quickly glanced over and saw. I don't know how he's going to do this or if he's going to do it all, but I thought this was just something that I should throw out there. You guys leave a comment, tell me what you guys think. I am just purely speculating upon this. I'm not making any accusations whatsoever. I'm going to leave links down below in the description box. Obviously, go through it, do a little bit more research, scrutinize my stuff, scrutinize your own stuff as well. Go back and forth, have a good, well-rounded opinion towards this. And if you find that you still believe in this even after all the scrutiny, my scrutiny or whatever, that sort of stuff, right? Then go for it. Do what you want. I'm not telling you what to do. Yeah, that's all I have to say. And just remember, just because you're a day trader doesn't mean you have to trade every single day.